But the deal is, when it does go up, when you hit a super cycle, then they go up, they could go up 10,000%. Some
Sure.
of these things. I mean, and right now we're at that point where, because of COVID, they didn't build any for the last 2 years. They didn't order any for the last 5, 7 years. And, we're at that point where, that super cycle's just beginning. And these are cheap. Nobody's talking about them. Some pay 10% dividends,
I own one that pays a pretty good dividend. I bought it on your recommendation. It's done pretty well, at least compared to the rest of the market. All right, everybody, welcome to the Angel Research Podcast. We are here, as usual, today to discuss the market's hottest stock stories and investment opportunities. Today, we have Christian DeHaemer joining us.
Hello.
Christian is a market analyst with a history of some very impressive predictions over the course of his career. Chris was telling people to buy Bitcoin back in 2016 before its first major rally. He called the historic downgrade of the U.S. debt rating in 2011. And more recently, he called the market top in 2021, late 2021, within 100 points of the S&P 500's peak, which is pretty impressive. And hopefully, Chris is coming at us today with some more bold and hopefully accurate predictions. We're going to touch on a few timely topics, so I recommend that everybody stay tuned. Before we let Chris go off, though, nothing that we say here today is personal financial advice. We can give you tools and insights to make great trading decisions, but we cannot trade for you. Also, please like, comment, and subscribe. The engagement really helps the channel out. Christian, welcome to the show.
Oh, thanks for having me.
I want to hit on a bunch of topics today, specifically some things that you have been writing about. I figure we could kind of like hit each one at a time and spend as much time on each topic as you want. I want to start with the aluminum shortage. You recently wrote about kind of a prediction about a rise in aluminum prices. So I was wondering, what are the driving forces here?
Well, the driving forces is, you have a number of things going on here, but mostly, of course, it's the high price of energy. Aluminum's very expensive to produce, and it sucks up a lot of natural gas or oil or whatever they're using. And they've shut down in Europe. So all these aluminum manufacturing companies, and aluminum's necessary for, for instance, like the new that's not so new now, but the F-150 is made out of aluminum. They mix it with magnesium, and it builds this really high strength, high quality aluminum. But if it becomes, at some point, when natural gas increases too much, it becomes untenable to make a profit at it. And so they're closing plants. And then this happened a couple months ago. On a similar note, BASF, the big materials maker, said they're leaving Europe for good just yesterday or today, which so you have this really, the whole premise of Germany as a production powerhouse was predicated on cheap Russian natural gas, and if they don't have that, then you have you start to have a big worry about that going forward.
Okay. So when you were writing about this, the price of aluminum was about $1.20 a pound.
Mm-hmm.
Did you have any predictions on kind of how high that could possibly rise, and then maybe a rough estimate of maybe when you think it might peak?
No, well, I'm sort of moved on to some other things, but because the price of natural gas is, it did a moonshot and then it's come back down, and then you have the worry about there's used car prices and new car prices are slumping, and so you have this idea that at least in certain segments we'll have a recessionary environment.
Okay, if the price of aluminum were to continue going up, how would you invest in that? Would you go for like kind of an ETF? Are there ETFs available that kind of just cover the spot price of aluminum, or would you be more like inclined to purchase are there like maybe some pure play miners?
No. I would buy these people that produce magnesium in the U.S. I just happen to have a couple of small play. First of all, you want to go with the lowest producer or lowest cost producer, and actually there's one in the UAE, but it's really hard to buy. But it's this great company.
They trade? What do they trade on? Like a different exchange?
No, they trade on the UAE
okay,
exchange.
Yeah, sure.
And so, but they're making money like gangbusters because their costs are essentially free from all the natural gas coming out of it. But yeah, that's what I would do. I'd look for American base production of just pretty much anything these days.
Okay. Let's move on to the general theme of onshoring, and then maybe like specifically in relation to the CHIPS Act. You were writing a little bit about kind of the semiconductor war between the U.S. and China. Could you give us a little bit of background on what's going on there?
Well, like Nancy Pelosi went to China to stir up these tensions between Taiwan and China, and I believe that was going to be like a Gulf of Tonkin moment where they could then enact these essentially a tech Cold War going on with China. The U.S. is worried about the Chinese, advanced weapons and things like that, and they're nipping that in the bud. And also China, I think President Xi wants to split, wants to be less dependent on the world, and he cares more about control over his people in a dictator totalitarian sense than he cares about, commerce or, prosperity or anything like that. And so we're just in this world where we're going to split apart, and you're going to have to choose sides. You're going to be, with the West and America and Europe and, a lot of South America, or you're going to be with China and, parts of Africa, India, South Africa, things like that.
What about any specific? So you just named a couple of regions that might have some kind of like benefit from like this onshoring trend. Are there any companies specifically that investors should be looking at?
Well, all the semiconductors got whacked, right? And so they're down quite a bit. Here's the thing. China doesn't have the capacity to build high-end semiconductors, nor do they have the machines to build high-end semiconductors. There's one company in the world, it's called ASML, that is the that makes the lithograph machines, these high-tech lithograph machines. They're a Dutch company, and they sell to Taiwan Semiconductor, Intel, AMD, all these other companies, and in fact, those companies also have shares in it. So it's this relationship they have, and they produce these high-end semiconductors, and China's just going to be cut out of that, and it'll have an entire wave of, cascading effect.
Have they already kind of announced that they're going to cut them off, or is that?
Well, yeah.
Is that just an expectation?
They're saying everybody's packed up and left. Things like that. But like AMSL has fallen from like $900 to $400.
Gotcha.
It's getting close to a bottom. But this stock went up 2,000% in the last 10 years.
What price would you like it at?
Oh, well, I'd like it about 300, I think.
Yeah.
But mostly I'd like to see a bottom pattern. But yeah, I'd be a buyer at 300 for sure.
All right. You mentioned energy prices earlier. You think that they're going to continue to go up?
Yeah, I think they're.
I think that a lot of people probably don't like to hear that, but I guess maybe tell us some reasons why you think that energy prices are going to continue to go up, and then maybe when might we start to see some sort of relief?
Well, we haven't even seen the scary stuff yet. So first of all, you have Russia and all of Russia's oil. All right, let me go back a step. When the Soviet Union ended, they were making about 10 million barrels a day. And it took them 30 years till just recently, a couple years ago, before they started producing 10 million barrels a day. It's not easy. They have, permafrost and massive expansion. It's 6,000 miles to get it to, where it needs to go and things like that. And all this high-tech flows of getting the oil up and running was done by Western companies like Halliburton and Schlumberger and ExxonMobil and all those. And all those guys have left.
Yeah.
And so it's going to fall off. It might not fall off in a month or two, but it might take 6 months or 7 months, but it's going to decline. And so they're going from 9 million barrels a day to something else. And on top of that, China is saying, China for the past 6-8 months has been, taking imports from, all over the world, but also from the U.S. of both natural gas and oil, and then reselling it on the open market. And Xi just said, or the government, the powers that be, said that they're not going to do that anymore. They're going to hold it. They're going to, because they're concerned about their own.
Gotcha.
government. But that's happening all over the world. You're even hearing that in the U.S. that, like, our exports are at record highs. And so, the Biden administration's saying, well, maybe we'll stop that, which, of course, will drive up prices everywhere.
Okay, so what has to happen for consumers and I guess just the rest of the world to see some kind of relief on the energy front?
Well, I mean, honestly, you need a clear political will that you believe in oil and gas, and you need the people to invest in oil and gas and spend on capex. And capex, so you go for an exploration, it could take 5-10 years before you get oil out of that well, and billions of dollars. And so, if all these governments are saying, there'll be no more oil industry in 10 years, and you're, BP or Shell or ExxonMobil, are you going to spend $5 billion, building some complicated offshore well?
Sure. Yeah, it's a scary situation for sure. What about on the transport side of things? I know that you've written a little bit about the shipping tankers, and I know you're bullish on that sector of the market. Could you explain what's going on here, and then maybe
all right,
what investments that people should be looking for, what kinds of investments?
Sure. Well, I love global tankers, right? But all right, here's why you like global tankers, because they stopped all the pipelines coming from Russia, right? And so and also, like, a lot of refineries have closed over the last 2 years since COVID happened and oil went negative. A lot of them went out of business. A lot of them were closed because of political considerations. And so now you have a need to get where the heavy oil, crude oil, is distilled in maybe in Louisiana, and you have to get it to where it's needed, in trucks in Europe. And so instead of going from, Russia to Europe and using no tankers, all of a sudden you add, 5,000-6,000 miles. And what that does is it increases the cost of moving oil around naturally. And oil tankers run on about a 15 to 20 year cycle, right? Oil prices go up, tanker prices, the rates they can charge go up. They build more tankers. It takes 3 to 5 years to build more tankers. And then there's too many. They scrap them.
Yeah.
And then they don't build anymore because they don't have any money. Prices go down. And then it happens all over again. But the deal is, when it does go up, when you hit a super cycle, then they go up, they could go up 10,000%. Some of these things. I mean, and right now we're at that point where, because of COVID, they didn't build any for the last 2 years. They didn't order any for the last 5-7 years. And, we're at that point where, that super cycle's just beginning. And these are cheap. Nobody's talking about them. Some pay 10% dividends,
I own one that pays a pretty good dividend. I bought it on your recommendation. It's done pretty well, at least compared to the rest of the market. Okay, last topic I want to kind of cover today is crypto. You recently wrote a pretty bullish article on crypto, and you're definitely not like you're not like a perma crypto guy.
No.
I think you kind of look at technicals, but you said it's time to get back into cryptocurrencies, which I found interesting just because you have been a naysayer in the past. So what's the thesis here? Why do you think that now is the time?
Well, if you look at the chart, it broke its downtrend. I don't know if we can put a chart up later, but you'll see it broke its downtrend. They're all down, 70, 85%.
Yeah.
And in the background, quietly, like organizations like BlackRock and Credit Suisse and all these organizations are adding crypto. Like Google's allowing Bitcoin for their web service, their cloud services.
Gotcha.
And things of that nature. So this isn't like crypto bros anymore. These are the big guys.
Real institutions.
Yeah, that are, getting in low, and so in a year or 6 months or whatever, when they're fully invested, they'll start hyping it,
Any cryptos that you like in particular? Are you looking at any altcoins? Or are you just more of like a stick with Bitcoin and Ethereum kind of thing?
Well, I like the Bitcoin miner. It's called CleanSpark. I just recommended it, and it was at $40 a year ago. It's at $3, almost $4 now.
Yeah.
They produce this is another thing. All these Bitcoin miners went out of business, right? Because they can't afford it because they're underwater. But these guys have done well, and they use clean energy and cheap energy, and they're U.S. based, largest U.S. based Bitcoin miner in Ethereum, and they produce 20 a day. And yeah, they're just super cheap. They trade below book value. They trade like 1.5 times sales. And a year ago they were trading at 15 times sales or something. So if Bitcoin goes up to like 40,000, Bitcoin doubles in price, these guys will likely go up about 350%.
Okay. All right. So one last thing. You mentioned the importance of investors kind of overcoming fear at a time like this. Any tips on how someone can actually go about doing that?
Overcoming fear?
Yeah.
Well, my best investments have always been where you have this little bit in the pit of your stomach. You're like, oh, I don't know. And then because, when so many people are against you, I just always go back to my track, what made me money in the past. So if I've done, as a PEG ratio under 1, it's in a market that I know it has long-term, it has a long runway, it has a moat, all these things.
Yeah.
Then, you say the rest of the market's wrong. But that takes something,
It's interesting. So do you like this market actually better than you've liked it over the past, let's say maybe like 3 years ago, because you're looking at those kinds of values and like those value metrics and the fundamentals? Like, is it easier to find buys, you would say, these days than it has been in the past?
Yesterday I saw like all sorts of buys, and I haven't done that in like a year.
Do you just run like a little filter or screen?
I run some filters, and I have a watch list and things like that, and but especially in these tanker stocks, because they're so cheap, and a lot of them are up like 300%, and I go, oh, I can't chase this, but then I look at it, and it's got like a PE of 5, and and it's growing like 1,000% or something crazy. They're talking about like rates. The rates they charge per day to haul, this diesel around, going from 100,000 a day to 500,000 a day, and that's all to the bottom line. That their costs are fixed, so their margins just explode. It's crazy.
And you've recommended some of those companies in your newsletter, or?
Oh yeah, I've recommended them in mostly in Launchpad Trader, which is the trading service. Yeah.
Okay, cool. We'll put a link below.
Right.
I've hit on all the topics that I had to cover. Is there anything else that you think was interesting that we should talk about, or you want to wrap it up?
Nah, that sounds good. I'm
okay,
good.
Cool.
Appreciate it.
All right. Thanks, everyone, for watching. Please like, comment, and subscribe, and we'll catch you next time.
All right, thank you.